Your startup does not need investor money, and here's why. So a few years ago, I was working with a founder in Lagos. He ran a food business and he had approached several investors, submitted pitch decks, financial models, financial reports, yet investors would not give him money. So he returned to his basics and built a business without getting a dime from investors, yet he was profitable. Here's the thing that you do not know about investing. I know that there's been the craze about investor money, Y Combinator, TechCrunch, how to be featured as somebody who has raised money or you have joined a certain accelerator. And this is all a form of craze that everybody's into right now that wants to start a startup. The next thing to do is to raise investor money. But that's not always the best thing to do for your business because for starters, you are not in the US. Like if you're in the US, then it's easy for you to just move to the Bay Area in San Francisco. You're good, meet a few investors, hustle for a few months, and then you get money. But if you're in Nigeria or most of Africa, you need to face the reality that investors' money is not easy. But the best thing is even that some businesses do not need it, and your business may be one of them. So for this founder, right, after talking to several investors, he came back, knew that he had some customers already. So what he did was just to serve the customers better, improve on some aspects of his business, and he was able to grow the business and scale it without any investors' money. Another thing that you need to even know about investor money is that it is not free. All these people that are posting online saying, I raised $100K, I raised $1 million, I raised $500K, I got into an accelerator, I got this. It is not free. All these things come at a cost. One of the costs is control. Once you receive investor money, you no longer own that business alone. So they are going to make this like they are going to impact on the decision that you're making. Before now, you could just come up with a new idea and you go and implement because you are passionate about your business. But once you have investors, you no longer have that freedom. They will control the business, they will decide what you do, and they will influence a lot of things in the business. I'm sure you've read about Steve Jobs, the founder of Apple company, makers of iPhone, iPad, So he started the company, got investors' money, and down the line, the investors were not happy with the way he was running the business. Then they kicked him out of the business. This was a company that he started. It looked like he started on from the scratch with some of his friends, but he was still out of a company because he had investors there. So investor money is not free. Even the grants, like even when you get grants, right? There are lots of requirements before you can get grants. I've worked with several founders that secured grants, and it is not free. Like the grantors will state some requirements. So I know a founder, right? Some years ago, she got a grant and she made loss in that same year that she got grants because the grantors were demanding that she does certain things. You must do this, you must do that. And in the bid of doing all of these things, the business was bleeding cash. So you probably do not need investors' money. And because of the costs and these other factors that equity could actually take more control. Because I've seen cases where the founder got investor money, right? But the the investors were making some decisions. They were overriding some of the founders' decisions and pushing the business in a way that the founders were doing all the work, but the investors were making more money from it. So it's a very how do I put it? It's a very tricky place that before you receive investor money, you should check if your business is the one that even needs investor money. Some people are even better off getting loans for a short period of time. They pay it off and they are free instead of getting investor money where they permanently give away some share of their business. There are some business categories that do not even need investor money. Like if you are in consulting or you are selling fast moving consumer goods, they call them FMCGs. Like you have a provision store, something like that. You don't even need investors' money. If you are into arbitrage, you don't even need investors' money because the profit margins in this business is significant. And all you have to do is to make sure that you are retaining some profits and you will never have to worry about getting investors' money. Now, some people do not know this and they start out chasing investors, writing pitch decks, going for conferences, begging, sort of, instead of focusing on the business, you incur all of this cost, and your business is not even the type that investors typically look into. So, if you are in this category of businesses I just mentioned, you should not even bother trying to get investors' money because you will still succeed. Like this one I'm telling you about, it was a food business for his case, and he focused on improving his pricing, improving his customer service to make sure that his customers were invested in the business. That way, he was getting lots of profits. I always tell founders that, see, the cheapest form of capital for you is actually your profit. It's your retained profit. If you have the right structure in place and you're making significant profits, it doesn't even have to be like 50% margin. Anything above 30% is significant, and you can start keeping some monies down for your save, like just like saving it. And in a couple of years, you have enough money to reinvest into the business, and you will not even have investor wahala. You will not have gone to beg anybody. You will not have stress to write pitch decks. Most importantly, nobody will be benefiting from your hard work more than you, which is one of the risks of investment funding. So the essence of this video is that if you've been applying to accelerators, if you've been applying for grants, if you've been approaching investors, and it seems like they are not giving you a listening ear, you may start to doubt your own business. You start to feel like, oh, maybe I'm not good enough, maybe my business is not good enough, and I need to tweak. So, but that may not be the case. You don't have to start feeling like a failure just because investors have not given you money. If they are consistently even telling you no, it may be a sign that, see, your business probably has some potential that you could scale beyond investors, like beyond their money. Just go back to the basics of your business. Check that you have customers. Like if you have customers already that are paying you, I'm telling you, you do not need the investors' money. All you have to figure out is how do you get more of those customers? How do you keep those customers for a longer time so that the profits will pile up and your cost of getting your customer reduces? And how do you make sure that you are getting higher profit margin per customers? Then another thing that you can do is something that big businesses do, like, and small businesses should also copy it, reducing costs. Most big business every year, right? They have a session where they are looking at what cost can they reduce in their business so that their profit margin can scale. So if you can even find a way to reduce cost and then you can deliver your product at a lower cost while your profit margin goes up, you don't need investors' money, because over time you'll be able to set aside some money and you'll be able to reinvest that money into your business. And if this even looks difficult, right? This is a simple way that you can achieve this thing. Just make sure that for every profit that you make, you have a separate account where you call retained earnings or retained savings or however you want to name it. But that is your business big goal. Instead of spending money on chasing investors or grants or accelerator and receiving plenty news and having your heart broken, you can do this, right? Just set this account aside for every profit you make every week or every month. Send money there. As the money piles, you could have a target for yourself. Okay, once the money is like 10 million, 5 million, or a certain target, depending on what you want to achieve in your business. You use that money, buy the equipment you need, fund the marketing that you need, and you'll be able to have the money that you need you'll be able to have the money you need to scale without getting investors' money. Now, to this founder that eventually built his business without investors' money, he's better off now. He's happier. The business has been able to scale. He was able to hire more staff and all of this without investors' money. So if you're in an industry that needs investor money, well, go for it, start chasing it. But if you are in a sector, an industry that does not need investors' money, which is something that I've mentioned, like, you don't need to keep chasing them. Just focus on the business, focus on the basics, focus on building, and your business will scale and even do probably better than some people that have received investors' money. And ultimately, you'll be happier because nobody will be controlling your company. You do not face the risk of being kicked out of your company.